India's retail inflation, based on the Consumer Price Index, soared to 7.4% in September, up from August's 7%. This rise was fueled by higher food prices. Data released by the National Statistical Office showed that food inflation, which accounts for nearly 40% of the CPI basket, came in at a 22-month high of 8.6% in September. The latest reading highlights the Reserve Bank of India's challenges in bringing inflation within its medium-term target of 4%, with a variation of 2 percentage points on either side. Inflation has now remained above RBI's upper tolerance level of inflation of 6% for 3 consecutive quarters. RBI Act says that the central bank will have to submit a report to the central government explaining the reasons for failing to meet the inflation target and remedial steps to rein in the price rise. RBI is facing such a consequence for the first time since the onset of the inflation targeting monetary policy framework that came into effect in August 2016. Last month, RBI Governor Shaktikanta Das had said the central bank considers the communication to the government missing the inflation targets as privileged communication and will not be making it public. Inflation had overshot the target for over 3 quarters during the initial months of the pandemic as well, but a technical shortcoming in the data collection, wherein data was collected without visiting the mandis because of the lockdown, had helped ensure that no such explanation has to be done by the RBI at the time. RBI's Monetary Policy Committee has raised the repo rate by 190 basis points since May to 5.9%, and economists expect it to raise rates yet again by at least 25 basis points at its next meeting in the first week of December. Late withdrawal of monsoon and intense rain spells seen in some states has had an impact on the price of perishables, especially vegetables. During September, prices of vegetables increased 18.05% from a year ago, while cereal prices rose 11.53%. Spices added to broad-based food price pressure with 16.9% inflation. Clothing and footwear prices jumped 10.17%, while fuel and electricity prices increased 10.39%, staying above the 10% mark for the 4th consecutive month. Key rice-producing states such as Uttar Pradesh, West Bengal and Jharkhand reeled under excessively deficit rainfall this season, weighing on paddy sowing and anticipated output. The weakening of the rupee by over 10% this year has made imports costlier for consumers and businesses. Meanwhile, industrial output contracted 0.8% in August after showing a 2.2% growth in July. A note by Quantico Research said that slowdown appeared to be broad-based with noticeable drag in consumption-oriented production, even as investment-oriented production too has seen loss of momentum in the recent months. The International Monetary Fund on Tuesday cut its growth forecast for India to 6.8% for 2022-23.
It is important to make a distinction between the underlying drivers of inflation. Focusing on the most recent inflation print of 7.41 in September 2022, we note that nearly 62% contribution to the headline CPI came from non-core items of food and fuel. Since this part is largely interest rate agnostic, monetary tightening is unlikely to have any impact here. Having said so, it does not mean that monetary policy would be irrelevant in the current context. The role of monetary policy is extremely crucial in avoiding spillovers from non-core inflation to core inflation, and further to inflation expectations in the economy. While the RBI has raised repo rate by 190 basis points cumulatively in a short span of 5 months, the transmission happens with a lag, typically of about 2 to 4 quarters. Going forward, we believe there is still some room left for pushing real interest rates to positive territory, and hope that the MPC would opt for another 35 basis point of rate hike in the upcoming policy review in December 2022. This, we believe, also needs to get complemented by government action, especially in case of non-core items of food and fuel, to reinforce the inflation targeting credentials of the economy.
Since the inflation print is heavily influenced by food prices, which are volatile and lately affected by global developments, the RBI's toolkit is limited. Thus, actions by the central bank will have to be complemented by further government steps on non-core food and fuel items. Failure to do so will damage India's inflation managing credentials.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.